Good afternoon. I am calling this working group taxes to order. Senator Rest, I believe, has a comment to start us off with. Senator Rest.
Yeah, thank you. We sent a text to you. I didn't have Representative Joy's cell phone number to include you on the text. I hope it was shared with you by the others. We did, as we conveyed, discover a fairly significant miscalculation on our spreadsheet, which has now been corrected, and at some point we're going to move an amendment to our spreadsheet, just so you know it's there. But Mr. Munn, who would be doing that, has been called to deal with another issue. He'll be here shortly, and if you would, when he does arrive, if you would allow us to explain that, we would appreciate it.
Of course, no problem. We know everybody's kind of running around the building today, so we'll go to Mr. Munn when he arrives. Excuse me. So I just wanted to kind of pick up a couple of things from yesterday to start off with. We really appreciate the offer that we received from the Senate. We have a counter offer that we're going to go over in a few minutes. I just wanted to, take the opportunity to make a couple of comments in general about the bill, with the understanding that there are some of those numbers are going to shift, and we're hopeful that they will, we'll see a reduced impact or kind of a reduction to LGA, CPA, local homeless prevention aid, and the local housing aid. Before we get started, we got the Senate's bill shortly before we convened yesterday, so we didn't have a ton of time to look it over and think about it beforehand. But I do just want to offer a couple of comments as we get going here. So in 2023, the House brought a really strong position on an increase to LGA and CPA into negotiations. We included an additional $100 million per year in both LGA and CPA. What we ended up, and we had an inflationary factor on both of those formulas, which is already there on payment in lieu of taxes. So, some local aids have inflators, others do not. What we landed on was an additional $80 million per year each in LGA and CPA, and that was the agreement that we all came to. And what's important about this is that, the LGA and CPA, local government aid and county program aid, are our general purpose aids to local governments. They help our local governments provide the things that all of our residents need. The only funding tool, basically, with some exceptions, the main funding tool that local governments have to meet the needs of their residents is the property tax. And I think all of us, we go out, we hear from our constituents, we go out and run for office, and we hear a lot about property taxes, especially for low-income people, seniors living on a fixed income, populations that we care a lot about have a lot of trouble sometimes making those bills. And so when we make the decision on our end to reduce local government aid, to reduce county program aid, we are shifting that on to property taxpayers. Local governments don't get to not pave a road, not have someone there to answer when you call 911. They don't have the ability to not provide the human services that they're required to under law. And so when we go back on our commitments to them, then they're in a really hard position. So if LGA and CPA had been indexed for inflation in 2002, CPA would be nearly $500 million today. It's currently $340. If LGA had been indexed to inflation in 2002, it would be over $1 billion, and it's now at 644 million. And all of us know what's happened to the cost of everything in the last 20 years. Kind of goes up and up and up, and that's true for all of our household budgets, and it's also true for local government budgets. And so, you know, I can speak for both the House GOP and the House DFL when I say that we're disappointed to see cuts to local government aid. We're disappointed to see cuts to county program aid. I'm particularly distressed to see cuts to local homeless prevention aid, which was established in 2021. I was the chief author of that bill. Commissioner Marquardt was then Chair Marquardt. He fought hard to get that established. The local homeless prevention aid is to make sure that kids who are in our schools have a place to lay their head at night. And it's an acknowledgement that if you don't have a place to lay your head at night, you can't perform in school. And every county, all 87 counties, get a piece of that money. And if you are not familiar with some of the things that the counties are doing, I would urge you to go back and watch a great hearing that we had in 2024 on it. Or, you know, the Association of Minnesota County is happy to provide that information to people. The local affordable housing aid was established in 2023. It acknowledges that the current reality today is that housing and homelessness are issues across our state, border to border. Every county is seeing an escalation of these issues. And we as a state government have an obligation to respond. So when we see a bill that cuts local government aid, cuts county program aid, cuts homeless prevention aid, cuts affordable housing aid, and provides a tax credit for sustainable aviation fuel, and provides a sales tax exemption for professional golfing association events, we are very distressed about the priorities that are expressed in that bill. I'll conclude my comments there. I just had one question, having had the opportunity to review the language of the Senate bill, and so I just had a question, maybe it's for nonpartisan. I'm looking at the sunset for data centers. So I think it's on page 65 of the SC 3276, which is the bill language from yesterday. So from reading the spreadsheet says, it has the same notation on the spreadsheet on line 48 as was on the spreadsheet for the previous version of the bill. And what it says is, data center exemption sunset extension to 2062. So that's the same thing that the previous spreadsheet said. But when I looked at the language, it's quite different. What it does is on 6520.22, kind of that little paragraph, so it's F, whatever it is, subdivision F. It takes out some important language here. So it says, it used to have this line at the very end, which said, basically, a qualified data center or qualified refurbished data center may claim the exemption in the subdivision for purchases made, and either is struck, within, 20 is crossed out, 40 years of the date of its first purchase qualifying for the exemption under paragraph A, and this was struck, or by June 30th, 2042, whichever is earlier. And so this language, whichever is earlier, that was struck in this latest version is very important, because to my reading, what it does is it says, if a data center makes its first purchase qualifying for the exemption under paragraph A, which refers back to the sales tax exemptions, that if they did that in 2060, they would get 40 years. So we would be talking about not extending the sunset from 2042 to 2062, but extending the sunset to 2100. Or if you applied and got that and made your first qualifying purchase in 2062, then the sunset would be 40 years from then. So it'd be 2102. And so I just want kind of some confirmation that I'm understanding this change properly, because it's really substantive and it appeared the same on the spreadsheet. So I just want to draw people's attention to the fact that what was a 20-year extension on the sunset for these data center sales tax exemptions, which are worth hundreds of millions of dollars a year, is not a 20-year extension. Effectively, it's a 60-year extension of the sunset. Takes us to 2102. We'll probably all be dead by then. Maybe there's somebody in here who will be alive. Greg Davids will still be he'll see you at this table in 2102. But can I just get a kind of confirmation that I'm understanding the change from the previous version of this bill to what the language that we see in front of us on page 65? Mr. Williams.
Chair Gomez and members, so my read of paragraphs F and the newly lettered paragraph G in the Senate article is that the per facility limit of 20 years is struck and extended to 40 years. And then separately, in paragraph G, it provides that the exemption is allowed for data centers, qualified data centers, large-scale data centers, and refurbished data centers that were certified prior to July 1, 2062. And so, under current law, the exemption would last 20 years or through June 30th, 2042, whichever is earlier. And that language, whichever is earlier, is struck.
Thank you, Mr. Williams. So that was just sort of something that I discovered in reviewing the language, but for the kind of the information of the committee as we're moving forward on discussing that provision. Representative Davids.
Okay, thank you very much, Madam Chair, and I certainly understand some of your concerns. However, and I don't know if I can legally do this because I need to come in defense of some of the Senate provisions that were mentioned here. I don't know if that's permissible, but.
We'll allow you this one time.
Thank you. I'll keep it. But for example, if you look at a couple of things in the Senate bill, and I agree with you on the LJCPA, we can't be cutting that. But a couple of things, well, data centers, we talked about that, but SAF is a huge moneymaker. And I know you got some costs up front and so forth, but in the long run, SAF is just amazing. And the PGA, we're putting in nothing, and there'll be millions of dollars of returns coming back at us. So just a couple thoughts on those. There's, in fact, I think I'm the author of some of these bills. So I am. We'll see what happens in 2021 or no, 2100. Looking forward to it. Thank you, Madam Chair.
Thank you, Mr. Chair. So unless anybody else has anything, we can move to the offer. I don't know if you, Madam Chair?
Thank you, Representative Gomez. Yes, I'd like to understand the offer that you're making here on parts of the bill. I understand that they're a response to ours and then some additional items. So once you explain it, we would like a recess so that my conferees and I can go and discuss it.
That sounds like a great plan. I think I'm going to kick it over to nonpartisan staff to just walk us through the offer, and then we'll see if anyone has any questions to clarify before we move on to a recess. I'll go to Mr. Williams first.
Chair Gomez and members, I'm going to discuss the Article 1 in the House and Senate bill section of this offer. I would note that in this offer presentation, provisions are noted as either new, accept, or counter. So the new items were sort of non-responsive, or new items brought into this offer that were not mentioned in the Senate offer from yesterday. Counter provisions are sort of intended to be responses to provisions offered in the Senate bill yesterday. And then accepting provisions as they were presented in the Senate offer yesterday. I'm going to skip around a little bit on this first section to avoid bouncing between myself and Mr. Clayman. So the first provision on here is countering the Senate's offer on the repeal of the K-12 credit refund assignability. The House provision has a slightly different effective date than the Senate provision, and the House is offering in here the House language on that. The House language is effective for assignments after the end of this year, whereas the Senate language is effective for taxable years after the end of this year. I'm skipping the next one. My colleague, Mr. Clayman, will cover it, so I'm going down now to Senate Sections 1, 2, and 12. That's the political contribution refund electronic filing system. The House is proposing to accept the Senate provision for the political refund electronic filing system. I'm skipping one more line again. The House is proposing in this offer to accept House Sections 6 and 12. These pertain to situations of coerced debt that is discharged, so it's an income tax subtraction and property tax refund, homestead credit refund exemption for those coerced debts. And finally, the last provision I'm going to talk about is skipping one more again, is House Section 18. That's the SEIU Minnesota. There's a collective bargaining agreement that included certain stipends, and we're proposing, or the House is proposing in this provision to accept Section 18 of the House bill, which includes an income tax subtraction temporarily for those stipend payments. And then my colleague, Mr. Clayman, is going to discuss the rest of Article 1.
Madam Chair and members, so skipping back up to the second item under income and corporate franchise, the House proposes a counter offer on the short line railroad credit. The House offers what's essentially the governor's language in House Sections 10 and 11. There's an effective date difference. It's not retroactive in the House sections. And there's also some language regarding an eligible transferor that is also not in the House language. Skipping one and then moving down to a new provision in the offer, the House offers Section 1 of their Section 1, which is a provision relating to the beginning farmer tax credit, and that provision in the House changes the priority allocation deadline for emerging farmers, which in the one of the recent the agricultural the ag bill that I believe was recently completed, that would be changed to limited land access farmers. Skipping one more and then going down to new House Section 17, the House offers House Section 17, which is the retirement annuity contribution provision, and that has effective dates so that the provision is effective for contributions made and timely made in calendar year 2023 to be designated for tax year 2022.
Thank you, Mr. Clayman. Are there any questions about the income and corporate section before we move on to sales and use? Not seeing any. I'll pass it back over. I'm not sure who's covering this.
Madam Chair,
Go ahead, Mr. Clayman.
moving on to sales and use tax, the House offers House Section 11. Those are the brewer return requirements. There's a parenthetical there regarding clarifying the effective date to ensure that the qualifying criteria that allows a brewer to receive the exception for the filing return requirement, that's applicable in 2025 to qualify, and then in 2026, then the exception would kick in.
Thanks, Mr. Clayman. Mr. Swanson?
Madam Chair and members, moving on to the property taxes articles, that's Senate Article 2 and House Article 3. The House offer is first to accept the Senate provisions on the attachments and appurtenances portions of the Senate bill. That's sections 2, 13, and 14. The House is offering a counter to the Senate offer on the property tax exemptions for tribal owned properties. So the House is offering to accept Senate Sections 3 and 5, which are the exemptions for the Leech Lake Band of Ojibwe property in Minneapolis and the Grand Portage Band properties in Cook County. The House is offering to replace the section in the Senate offer for the Mille Lacs Band of Ojibwe property in Minneapolis with the House language for that section. So that would be House Article 3, Section 6. And also in this counter, the House is offering one additional section, which is the property tax exemption for the Red Lake Nation College in Minneapolis, and that is House Article 3, Section 20. The House is offering to accept Senate Section 11, which contains, the House is offering to accept a portion of Senate Section 11. That provision includes the addition of floriculture properties to qualify for the egg classification. So this offers to accept the floriculture provision only. The House is offering to accept Senate Sections 21 through 24, which is the land bank abatement provisions. And the House is offering to accept Senate Section 25, which was the property tax exemption extension for the property in Bloomington.
Thank you. Before we move on to property tax aids, I just wanted to note on the tribe, I love that song though, not that version, it's kind of not the best way. So on the tribal-owned property tax exemptions, there just was a difference between the House and Senate language on the Mille Lacs Band of Ojibwe property in Minneapolis, which is a mixed use that includes housing and a community center. And so there were just, we're happy to send over just the comparison between the two sections, but we worked with the city and the Mille Lacs Band to kind of amend that language from the version as it was originally introduced, and that originally introduced language is what's carried in the Senate, but we just have a change, and so we'd be happy to send those over. Back to Mr. Swanson for property tax aids.
Madam Chair and members, the property tax aids articles are Article 4 in both bills. The House is offering to accept Senate Section 15, which contains all of the aid penalty forgiveness provisions. So this would include LGA penalty forgiveness for the cities of Stewart, Alpha, Odin, and Trotsky. And the House is offering one new provision for this article, and that's House Article 4, Section 4, which provides a base aid adjustment for the new city of Baldwin.
Thank you, Mr. Swanson. Any questions about the property tax sections? Not seeing any. We can move on to public finance. Mr. Cope.
Thank you, Madam Chair. The House offers to accept the Senate's public finance article. And I can proceed with miscellaneous.
That'd be great, thanks.
All right. With respect to the miscellaneous articles, the House offers to adopt the Tax Expenditure Review Commission changes that are in the House version, House Sections 1 to 7 and 9 of the House miscellaneous article. The House is also offering new provisions to adopt the provider tax research credit rate changes in the House bill, and to adopt the changes to pharmacy refund timing for the provider tax, which is House Section 15. There's a new offer to accept Senate Section 12, which is an increase to the debt ceiling of the State Agricultural Society. There's also a new offer to adopt House Section 25, which is an extension of availability of grants to Minneapolis from the 2023 tax bill. The House's offer is to accept Senate Sections 35, 51, and 58, which is the repeal of local cannabis aid, and to accept the Senate offer of Sections 50 and 58, which is to repeal the illegal cannabis and controlled substance tax. With respect to the DOR policy and technical bill, the House offer is to accept the entirety of Senate Articles 12 and 13, and to counter the Senate's offer of Article 11 with the removal of one section that DOR had requested be removed with respect to pass-through entity tax. There's also a new offer to include a section dealing with lawful gambling reporting requirements that have been included in the DOR policy and technical bill.
Thank you, Mr. Cope. So that concludes the House research walkthrough of the offer. Happy to take any questions. I just would say if there are things that aren't accepted, we're not saying no. We're considering them holds for now. But Senator Rest.
Well, thank you, Madam Chair. We will retire and discuss this, but I want to go back now because Mr. Munn is present.
Oh, yeah.
We will have, following his presentation of our amended spreadsheet, that will reflect an amendment that we will be making to our own spreadsheet. Doesn't need your vote on it, but just what our thing is, which will be the A1 amendment, and with a revised spreadsheet that reflects it. So, Mr. Munn, if you would explain the circumstances and what this means in terms of the spreadsheet as well as
Mr. Mum.
Madam Chair and conferees, the spreadsheet that was distributed at the beginning of yesterday's working group meeting contained a formulaic error that did not correctly compute the revenue from repealing local government cannabis aid. So in the value of that was approximately $65 million over 4 years. The amendment that is being distributed takes the savings that should have been reflected in the initial spreadsheet and uses it to reduce the local government aid reductions. So each of county program aid, local government aid, homeless prevention aid, and housing aid is now being reduced by $4.25 million per year. That is the effect of the amendment, and it is reflected in the spreadsheet that is being distributed as well.
Madam Chair?
Yeah, Senator
I
Rest.
think what the amendment and the spreadsheet will show is a reduction to that amount for local government aid, that cut and LGA and the accompanying cuts in the reductions in the other aids, so that I think the most dramatic ones are LGA and CPA, and those amounts go down to a cut for each of $4.25 million rather than our what we were forced to do. And I think all of us have the same opinion about making cuts to LGA and CPA, and there's no disagreement whatsoever about the difficulty and the justification in having to do that, but that's where we were left. But this miscalculation, bringing back that $64 billion allows us to have, even if it is remains totally unacceptable to you, it is significantly reduced. So with that, we have that, as you noted, about receiving our bill. Yesterday, we have just received the language in your bill. So we will request a recess from you, and we appreciate some of the things that you're moving toward. Others probably we will not, but we'll see if we can come back with a motion that we could vote on.
Thank you, Senator Rest. Chair Davids.
Well, thank you, Madam Chair. Before we go into recess, I just want to clarify that miscellaneous, where it says we took the Senate language for the Agricultural Society debt limit. I believe the House language, it was contingent upon booking Jefferson Starship. So that is not included.
Yeah, we're going to need that amendment to move forward, I
bit.
think, with the
I think so.
agricultural limit. So
Give it to Freiberg in here.
Jefferson Starship or bust. With that, we're in recess to the call of the chair. Good evening. I'm calling this meeting of the Taxes Working Group back to order. You've sent an offer over, Madam Chair. Sorry, I have this weird echo. Okay, thank you. I'll just note that it looks like Senator Weber is joining us online.
Yes.
And I bet Senator Dibble is busy with other matters. So I'll go to Senator Rest if you want to tell us anything about your offer before we get
Sure.
to questions. Thank you.
Yeah, why is that echo happening, I wonder?
See, I told you it was weird, right?
No, I don't know. Our expert pages we sent home, and so our substitute pages are having to learn the Zoom system and so on. So that's why I was calling. Well, what the Senate did is to, we had sent a proposal, and then pleased to receive a proposal back commenting on the items that we hoped we could adopt. And what you're seeing here as a response at 7:11 p.m. is when we sent our response to the members of the House. And so we can publicly go through them, but they have received them through an email. And I think the two co-chairs in the House have expressed, and I feel the same, frustration because we are not a conference committee, and so we do not have the revisers side by side, which makes things so much easier to exchange offers and to know what the differences are. And I think the three of us have been unique in being committed to meeting in public. We're the only conference committee that is doing that. But after I present this and a motion that I hope will be, anything on it you don't like, we just take off, rather than adding anything, which would then lead to us having to have a discussion. Okay. So if that could be the way we operate, at least for this evening, but then maybe having Representative Gomez, Representative Davids, and the other conferees talk about how, given the difficulties we have, how we can operate more efficiently in moving things forward, still avoiding secret meetings like all the other conference committees are having, or not conference committees, but working groups, of which I have been very vocal and unkind in my criticism of that process and of what other people are doing. And that's not a criticism of the House, it's a criticism of both, it's more criticism of my own caucus. So the way this is formatted is, since you all responded to our things, so in Senate Article 1, compared with House Article 1, your counter was to use the governor's language in House Sections 4 and 19, and the repeal, which deals with repeal of the K-12 credit refund. So it's your language, and so we don't need to do these one by one, but our response is that we accept, which would be that it is the House language for those two sections. The same thing with the governor's language, and now we're still in Senate Article 1 on the short line railroad credit certification and transfer. We accept the House proposal, which is to adopt your language from the governor's bill in sections 10 and 11. We The next one was Senate Sections 1, 2, and 12, the political contribution refund electronic filing system, to accept that. And for the most part, these are not concessions back and forth. It's because they're almost identical language in these things. So it's not the House winning or the Senate winning. It is recognizing that we had similar or exact policy provisions, and they're not, and some of them are not minor. We did then with House Sections 6 and 12, which was the coerced debt subtraction. That's what you all offered to us, and we would accept, but at this point, only along with Senate Article 1, Section 18 included, and that is the feature of the coerced debt only that would allow an exclusion from calculation of household income for renter's credit. That is that remains still a thorny, we have it here, but it's still a thorny issue because we start with adjusted gross income, and to start making carve-outs for the renter's credit is problematic. However, for this one situation, it seems to me that it is warranted. Generally, as I understand it, and Ms. Pollock can correct me, but payments to victims, whether they're, however that comes about, let's say from a conviction, those payments are excluded from the calculation of adjusted gross income, so they don't present the same kind of complication that it would for these. But that's still what we are proposing. And then on House Section 17, we are agreed on that, and that is the bill brought by Representative Davids and myself. There was an issue about the date and when the and I think it was because Representative Davids, there was an error in the revenue estimate that did not reflect what the actual date was in the language of the bill. So that's correcting that. Then in the sales and use tax, Senate Article 3, House Article 2, that new section of yours, Section 11, was the brewer return requirements, which indicated that instead of having to file a report monthly, it would be annually. Senator Housechild had that bill in the Senate. We didn't particularly disagree with it, but wasn't heard because he knew it was moving in the House, and it seems we believe that to be common sense change. So even though it wasn't in the Senate bill at all, we stand ready to, at Senator Housechild's urging, to accept that that clarification of when you need to file that and its effective date. We accepted, or you accepted the Senate sections with attachments and appurtenances, and so that just results in an agreement. We are proposing at this point, and I think you made, Madam Chair, the comment earlier that just because something's not accepted now doesn't mean it's rejected. It just means we're wanting either more information or something additional. And so with regard to the tribal-owned property tax exemptions, the sections 3 and 5, which included the Leech Lake Ban of Ojibwe and the Grand Portage Ban. And then on the next one, the land bank agreement, I believe those actually were, that was an identical one of the ones that's identical, and we agreed on that. And on section 25, the Bloomington property tax exemption extension, we are agreed on that. And then on the property tax aids, the aid penalty provisions, forgiveness provisions for the cities of Stewart, Alpha, Odin, and Trotsky, that was identical in both bills, so that's an agreement. And new to us was your House Section 4, which was establishing a base aid for the city of Baldwin, which is a new city that so that they can start receiving LGA if they qualify. And I'm not sure, Mr. Silvio, what is the year that that's going to be effective for? Or Mr. Munn?
Madam Chair, it's a House provision, so I'm not familiar with this specific city.
Yes, of course. What is the year then that it begins? I just don't remember.
Madam Chair, members, that would be aids payable in 2026.
AIDS payable, thank you. Yes, and we certainly agree to that. And I think I described the situation correctly. It's a new city, right? Yeah. Where is that? Anybody know?
That's your arena.
Thank you, Madam Chair. It's Representative Lawrence's district, and it's just north of the cities, south of Duluth.
Where is he?
North of the city, south of Duluth. It's a township, basically, that has become a city, from what I understand. Yeah.
Oh, that's cool. That's
Yeah.
great. All right. Then you proposed to, or you accepted Senate Article 7 for the public finance article, which included that one extra provision that came in late, too late for your bill, but not for ours. And then in the miscellaneous, Senate Article 10, House Article 7, we would accept for sections 2, 3, 6, and 7 only. If you want to talk about more than that and adding more than that, we could do that, but that would not be part of my motion. And then new section, Senate text in 12, accepted, which has to do with the debt limit increase for the state fair, called the Agricultural Society. Then the next one has to deal with the repeal of local cannabis aid with 35, 51, and 58 in the Senate sections, with at 58, paragraph B, and then that agreed on, and then with the next part of that, section 50, and another paragraph from section 58, or two of them actually, A and D, which is the repeal of the controlled substance tax, which I went in for to make a point, but was generally, since those controlled substances were illegal, not used in any meaningful way. Then in the DOR policy and technical bill, which for us was Articles 11 to 13, and yours Articles 8 to 10. The counter was Senate Article 11, Sections 1 and Sections 3 to 11, which had the effect of removing the pass-through entity tax provision and that the department commissioner requested deletion, and we accept that. And then in Article 12 and Article 13, they are identical and they're agreed upon then. And then Article in something that was new, the House Article 10, Section 5, which was the lawful gambling reporting requirements changes that we would accept. So, Madam Chair, I don't know if you want to take these up as one motion, or you want to suggest right now ones that you don't want us to deal with. If you suggest them, that will not be part of my motion.
So Senator Rest, I think we're going to have maybe just some discussion first, because
Sure,
I think
go right
there's
ahead.
maybe
Yep.
some questions potentially. Representative Agbadje.
Thank you, Madam Chair. Going through this, I just saw that there were, compared to our offer from 1 p.m., the 7:11 p.m. from the Senate response just has a couple of things missing, or a couple of things that kind of spark more questions. And so, if you don't mind, Madam Chair, I'll just kind of go through for a little bit. One of the things that stood out to me in the property section, particularly related to tribal-owned property tax exemptions, is our offer originally had 4 tribal nations that had asked for tax exemptions: Leech Lake Band of Ojibwe, Grand Portage Band, Mille Lacs Bands of Ojibwe, and Red Lake Nation College. The Red Lake Nation College one is especially important to me since that is in my district, and for the college that they put there, which I think has been doing really well. And so one of the questions I have is why only 2 of the 4? Because it seems very strange for our sovereign nations who are essentially asking for the same thing. Why not just do all of them at once, since we're able to, and treat them all the same, rather than having, kind of putting different groups against each other, particularly when you look at that compared to the aid penalty forgiveness provisions that we're doing for other cities like Stewart, Alpha, Odin, and Trotsky. So that's just one question I have, Madam Chair, to better understand why the exception was made for Mille Lacs and Red Lake.
Thank you. Senator Rest.
Yeah, thank you, Representative Gomez and Representative Agbadje. And I'm going to ask, we had some hesitation about those 2, and I'm going to ask Mr. Sylvia to explain how those 2 are different from the other 2 in terms of what the proposal is, and why we want more time to hear from you about why, although they are so different, that we weren't willing at this point to include them in this motion, and won't, but not that we wouldn't take them in an additional motion when we hear why that should be the preference. So, Mr. Sylvia, if you would explain.
Mr. Sylvia.
Madam Chair and Representative, I think that the difference in the language that Senator Rest is talking about in the Senate version, it's written a little differently so that it's the market value of the portion of the tribal-owned property. This is the Minneapolis mixed-use building.
Mr. Sylvia, that's the Mille Lacs Band.
Madam Chair, yes.
Thank you.
So the Senate version would provide that the market value of that portion of tribal-owned property would be exempt from taxation. The language in the Senate bill is limited to, in the aggregate, 7,955 square feet. I think Senator Rest had some concern about sort of the mixed-use nature of this building, And the information that was provided to the Senate included I believe the potential for a sub-ground parking facility, and that is not exempt in the House version, but it is in the Senate. So I think they were just wanted to be more discussion about sort of the extent to which both the House and the Senate, though we have the same sort of intent to exempt a portion of the building, some of the concerns about the lack of sort of the treatment of the parking facility was a concern I think that Senator Rest had. Concerning the special law in the House bill for Red Lake Nation College, we just did not have that in our Senate bill, and I think that's a policy decision that Senator Rest had made, not to include it in this offer.
Representative Agbaje.
Thank you, Madam Chair. Okay, I mean, I guess that's a little bit helpful. I guess I just don't understand why. Okay, or
Yeah.
Jared?
If, maybe we can go to Mr. Swanson, because we did have some, I don't, maybe we can talk about the parking issue. I know that like the, having that very specific square footage, I think there was some concern of like, what if it's 10 square feet, you know, bigger than that? We didn't want to, kind of to make something that was potentially going to like cause a problem in that way. But maybe Mr. Swanson could talk a little bit about the conversations that he had with the city on this one. Mr. Swanson.
Madam Chair, members, I think you kind of highlighted the main issue that we had discussed. One of the, as Mr. Sylvia mentioned, one of the what I would call two differences between the House and Senate provisions on this section is how the language identifies the property. As Mr. Sylvia mentioned, the Senate language uses an approach that identifies the property by the square footage of the portion of the property that's used for tribal activities, whereas the House language identifies the property as a mixed-use development. The other portions of the language that identify what city the property is in and who owns the property, those are identical. Mr. Sylvia also mentioned the difference with the parking facilities, and those are in paragraph B in both versions of the bill. I'll also note that one other difference between the House and Senate language is that paragraph B in the Senate version clarifies that any portion of the property used for single-family housing or market-rate apartments is not exempt, whereas the House language states that any portion of the property used for housing in general would not be exempt.
Thank you, Mr. Swanson. I'm sorry, did you mention the parking part? Okay, you did. I'm sorry. Okay, thank you. Senator Rest?
So why do you want the parking to be exempt? That doesn't seem to me to have anything to do with the exempt purpose for these buildings. And this one, there are other, in fact, I've done them as well. There are other properties owned by bands for their exclusive tax-exempt purpose. And so it's not new to do that, except this is an extraordinary property because it is so mixed use. And so it would seem that we want to be as precise as possible. The Department of Revenue had, with regard to the square footage, the Department of Revenue had assured us, and the commissioners here, that although he may not know this issue because we got it from the research people, that it is quite possible that to value property by square footage, and that is not a that is not a difficult thing to do, and so it does not present an overwhelming property issue to be able to assess based on square footage, and the square footage is what was presented to us by the band. So that's why at this point we want, some answers to those questions before we would put it in as a motion. Doesn't mean we, again, as Representative Gomez had indicated, just because something is left over in a response to an offer doesn't mean it's not able to be adopted at a later point.
Okay, thank you, Senator Rest.
Sure.
So can I go to Mr. Swanson to just talk a little bit further about the parking? Thank you.
Madam Chair, members, I believe in the House version of the language as it was introduced, the parking provision was not in the bill. And when the House made changes to the language, I think it was only trying to address the portion of the bill that identified the property, so the square footage clause that's in paragraph A, clause 3, that first difference between the bills that I highlighted. So that's why I think that's why the parking portion was not in the House language.
Senator Rest, does that?
So just to be clear, you're not suggesting by leaving it out that it should be exempt. And so it's a very, very complicated piece of property to not mention every single part of it that would be exempt and the parts that would not be exempt. So we're gaining more information now, and maybe we'll come back to that and accept it, but explaining the reasons it's not in this motion.
Okay, thank you, Senator Rest. I just would mention that the way that we kind of got to omitting that really specific square footage in when we made the modifications was based on talking with the city and them letting us know that, you know, the assessor was worried about that really specific language, and that if it ended up larger as it is built, then the assessor's read is that they would have to assess the entire property as taxable. And so we wanted to not put that really specific language in there on that front, but we can discuss the parking issues further. And just to go back to the Red Lake College, there was no kind of questions or concerns with the language, just that it wasn't an issue that you heard in the Senate Tax Committee. Senator Rest?
The issue of obligating state money to pay the taxes that are owed on this property when it moved from the former owner to the current owner did become a concern. It's happened, it's been brought up a couple of other times, and at this point just needed, again, much more thorough discussion of why the state should be paying off the, I don't know, Mr. Sylvia, what would be the state payment for this, or Mr. Mung?
Mr. Mung?
I believe it is 122,000, but perhaps the House
Yeah,
should
or the
confirm
House, if
their
they would.
provision.
And so we're just reluctant to do that again in this motion without, for the same general reasons I've been giving before.
And Ms. Highmark, did you just want to confirm the cost to the state of this one?
Yeah, Madam Chair and members, yes, confirmed with my counterpart, Mr. Mum, it's 122,000 in fiscal '25.
Thank you, Ms. Highmark. Representative Agbaje.
Thank you, Madam Chair. Thank you for the discussion on those. Yeah, I mean, those seem kind of somewhat differences that could be worked out, hopefully relatively easily. So, you know, I think one of the questions I have is just why not do that on this offer now? But understanding that folks want to take a little bit more time, so I would just suggest that maybe that's not necessarily something that we take up in whatever motions we end up doing until it gets sorted out. I also noticed that a couple of other offers that we had made were not accepted or agreed to, so I'm assuming that means that they were not agreed to, and so I would just like to pose the question as to why. I think one of them being, the beginning farmer priority allocations, that seems to me to be more of a technical change, so just kind of wondering what the reasoning was for that, or if that's something that you anticipate coming in a future offer. And then finally, the SEIU Minnesota stipend subtraction. This also seems to be something that could very easily be in this bill. It supports our low-wage workers, particularly our PCAs, who do help us out in with our most vulnerable populations. And so just really wondering why that couldn't be something that could be accepted this time around, or if that, in your mind, is something that would come at a future date.
Madam Chair,
Senator Rust, or Senator Putnam?
Senator Putnam can explain one.
Thank you, Madam Chair, and Representative Yabay. So the beginning farmer concern, we still have other ambitions relative to the beginning farmer tax credit. It's not that we don't support the tax credit, it's we think that it needs to be a little bit more robust. So for example, the Senate position is to remove the cap on the beginning farmer tax credit. There is also a provision about limited liability corporations. So there's more going on in the beginning farmer tax credit conversation, which is why we did not accept the House provisions at this point.
Thank you, Senator Putnam. There was also the question about the SEIU item, the SEIU contract item.
And Madam Chair, that was the first we had seen of it, and we certainly should be flexible and take new things on occasion, but I wanted just to review that more, and certainly can come back. Again, we're trying to be really cautious with one another when we have new language that the other side hasn't seen. If it's something simpler like the brewery report that wasn't in our bill, that's a different question to me than the SEIU provision that we didn't have.
Thank you, Senator Rust. Representative Agbaje?
Thank you, Madam Chair. Sorry, this will be my last question. And then I know we've been going back and forth a lot, Senator Rust, about the Tax Expenditure Review Commission. I thought we had gotten to a good place, and so I was just interested in wondering why only the bare bones aspect of the reforms proposed you have put forward to accept rather than more of the policy as we've discussed in the past.
Senator Rust?
Well, I think the one that I stumble over is the somehow the responsibility of the tax chairs to provide, I don't have that language in front of me, to provide some sort of objective. And so what I recalled is we're trying to get rid of the purpose language as a responsibility of the legislature, because as you know, the Senate never puts in any purpose language, and even if it's in the law, we don't do it, and there's no consequence for doing it. And I can tell you that if a bill came along that's a tax expenditure and the requirement was for the Senate tax chair to provide this objective, we simply wouldn't do it, because that's not the purpose of them. That's the job of the Tax Expenditure Review Commission, which I still don't understand why we haven't had a meeting this year. The terms that expired in January for Representative Agbaje and myself as the chair and the vice chair, so we don't have those roles, and we need some regularization of how you call a meeting and so forth. But it didn't seem to me to make sense to have impose a requirement that has no consequence if you don't go along with it, and I probably wouldn't. So being as honest as I possibly can about that.
Representative Agbaje?
I'll just say final comment. I mean, yes, I definitely understand. I think part of the reason we haven't had a meeting is I think we have not had the full appointments, but I could be wrong about that. I think on this, it probably does make more sense maybe to have a little bit more discussion on it, but I think it'd be nice if we could come to an agreement, just so that way, whenever we do get the full appointments and we can get started, that we do have the reforms in place to do that. I think I'll just say finally, Madam Chair, I would propose instead that maybe we take up some pieces of the offer rather than wholesale as to,
I understand it.
and, just take up.
She said she couldn't.
Sorry, I would just say that I would recommend that maybe we take up some of the ones that we know that we are ready to agree to, kind of one at a time, rather than the one motion with pieces taken out, because I think it might be easier just to do the few pieces that we agree to rather than striking.
Madam Chair,
Senator Rest?
I'm perfectly willing to have us go article by article and provision by provision, and if you don't want them, we just say delete that and it's gone.
Sounds good. Just before we move to that, one last question on, just wondering about in our offer in the miscellaneous section, Senate Article 10, House Article 7. There are these two provisions related to the provider tax, House Section 14 and House Section 15. I know that the first one is something that was in the governor's bill. That's kind of, right? And you guys are looking, yes? Okay, Joanna's nodding, so I'm pretty sure it was in the governor's bill, thank you. Yeah, so just, I appreciated the explanation of the omission of the other items. Just wondered if you could tell us a little bit what you're thinking about those provisions.
I really wasn't particularly familiar with them, so didn't want to include something that I really didn't know anything about. Doesn't mean we can't come back to them and adopt them, but this was this is a surface kind of thing. And so I just don't think it's responsible to just put something in that I'm not familiar with. No other reason than that.
Thank you, Senator Rest. And then the last item is the extension of the Lake Street grant from the 2023 tax bill.
And in our bill, we cancel out what has not already been spent. So that wouldn't have been that wouldn't be consistent to our provision in the rest of the bill. And I know that it was put in the jobs bill, but that would be contrary to a discussion we want to have about the grant itself.
Okay, should we have the discussion about the grant itself then?
Not at this point, because it's not in our proposal.
Okay. Sounds good. So, right, it wasn't our proposal, which is why we brought it forward as a discussion item.
Yes.
And since we're in public and we're having a public meeting for
And that's-
discussion in
and
public.
it's almost a $10 million item, that grant from 2023. We thought it needed more discussion than just simply to put it in a thing here. And we certainly don't have the extension of it for 2 years, and would, need to have more light of day on that than just accepting an extension of the time without even talking about it.
All right. So I guess I want to make a proposal about, if you're okay with it, we could do just like one vote. I will first go down the list and indicate whether a provision is in or out of the motion I'm going to make.
Okay, I thought, since it was our response, we were going to make the motion, but if you just want to say which ones you don't want.
Yeah, either way,
Yeah.
I
So
don't
go
mind
ahead.
who
Just
makes the motion.
Tell us
So,
which ones we won't be voting
all
on
right.
tonight.
So the first, I'm just going to go through them quick if I can.
Okay?
First is a yes. The second, House Sections 10 and 11 are a no. Senate Section 1, 2, and 12 are a yes. House Section 6 and 12, no. House Section 17, yes. Moving on to sales and use tax, House Section 11, yes. Moving on to property, Senate Sections 2, 13, 14, no. Senate Sections 3 and 5, no. Senate Sections 21 to 24, yes. Senate Section 25, yes. Turning over property tax aids, which is Senate Article 4, House Article 4. Senate Section 15, no. House Section 4, no. Moving on to the public finance article, Senate Article 7, yes. Moving on to the miscellaneous article. The House Sections 1 to 7 and, or the Turk, they're in different sections. House Sections 1 to 7 and 9, or 2, 3, 6, 7, that's a no. Senate Section 12 is a no. Senate Sections 35, 51, and 58 is a yes. Senate Sections 50 and 58 are a yes, or paragraphs A and D of 58, excuse me. Moving on to the DOR Policy and Technical Bill. Senate Article 11, Section 1, and Sections 3 to 11 are a yes. Senate Article 12 is a yes. Senate Article 13 is a yes. House Article 10, Section 5 is yes.
Madam Chair, that's my motion then.
Sounds good. All those in favor, please say aye.
Aye.
Aye. All those opposed, no. Motion carries. And is there something special I'm supposed to say to have the reviser start doing it? Okay.
Madam Chair?
Yes, Senator Rest.
The instructions.
Help me out.
The instructions is, although we may think we have done something with that vote, we actually haven't. But if it is our understanding, when we take those votes, that they become a part of the bill that is to be introduced when a special session is called, that certainly is my commitment to you.
And mine to you, Senator Rest. Okay.
And once again, it doesn't mean that some of the other things that were objectionable to you, that we can't return to, and you can make motions about them as well at some other time.
Sounds good. Chair Davids?
Thank you, Madam Chair. And we sit here at, it's after 10 o'clock tonight, and we're talking about having more time to do things. Members, we have no time. At this pace, we will finish this bill on May 22nd, 2030. So I just say tick-tock, tick-tock, let's not dilly-dally. We need to start talking about the big issues. We are having trouble with nothingness. So I would like to have a discussion on, let's talk about some of the big stuff, and can we bring it up? For example, in my world, there are three numbers, 68, 34, and 1. You've heard me say this before. It takes 68 votes in the House, 34 in the Senate, and 1 governor to sign it. For example, with my dear friends at the Senate with a proposal to cut CPA and LGA, that doesn't pass the House. I can't get my 68, so I can't even get it over to you for the 34 or the 1. So we need to start talking about some big issues very quickly, and the reason is I can see leadership coming down, swooping down upon this room and taking this and doing it themselves. So we're going to have a whole bunch of folks that know nothing about taxes writing the tax bill. If that doesn't concern you, I don't know what's going to concern you. Should we start? I mean, let's go. The big stuff, R&D, data centers, free file, ballpark tax, PGA. I don't want, we could lose, I don't know. I have no inside information. We could lose this bill tomorrow night. And at the rate we're going, we're just not going to do it. So at some point, I think as a committee, and I'm not the chair tomorrow, Senator Rest is chair tomorrow, we need to talk about some big stuff and take some votes on it. Get it out of here. Because I don't think we're going to like what the tribunal does. I really don't think we are. So we got to pick up the pace a little bit. We got to pick her up. And we can have all the fine debates we want, but when it's midnight tomorrow night, I think we lose the bill, or the potential bill. So just some thoughts. I'd like to start talking big stuff. And, I mean, we can't even agree on nothing. Nothingness. Half the stuff here is, oh, it's important to somebody, I'm sure. But in the scheme of things, folks, we got a long ways to go. And I think we better get going. Thank you, Madam Chair.
Thank you, Chair Davids. Appreciate those comments. We did hear from the Senate that when we gave you a spreadsheet yesterday, I'm sorry, my days are running together a little bit. We understood that you were preparing a spreadsheet offer to send back to us. Was that accurate? And if so, when can we expect
No, what
that
we
offer?
did.
Senator Rist.
Thank you, Madam Chair. What we did, Representative Gomez, was we announced, and again, I don't know if it was today or yesterday, that we had discovered a miscalculation in the aids, and we revised our spreadsheet for you to look at because there was a $67 million miscalculation, and we provided you with the amended language that fit into we called it Amendment 1, amending our own stuff, not asking for any vote for anybody else, but amending our own proposal that reflected correction of that error, and you all got that, so that the reduction in, so that the cuts in LGA and CPA were dramatically reduced, as well as the cuts in the housing aid and the, what was the second one? There was a homelessness aid were dramatically reduced. All of the money in the $64 million error on our part was redirected to the AIDS cuts. So it's not a proposal as such, except that it corrected was a correction to our spreadsheet based on our discovery of the miscalculation and how we had applied that. So the aid cut is not, which as much as I don't want LGA and CPA cut either, and I certainly accept your criticism of that. Nevertheless, that still remains part of our proposal, but I think it's 4 point, I don't have the spreadsheet in front of me, but 4.25. Yeah, 4.25, and that's where the aid was redirected, and also the homelessness prevention aid cut was greatly reduced, as well as the statewide local housing aid.
Yes.
So it's not exactly, it's not the offer in the
Right.
same, it's just revising our spreadsheets because we made an error that actually is very fortuitous. And it didn't, at least it didn't go the other way, which would have been very, very problematic.
Agreed. Thank you for the clarification, Senator Rest. And we're really happy to see the reduction, the significant reduction in the cuts to LGA and CPA, much less significant reduction in the cuts to the housing and homelessness aids, going from 5 million to 4.25 million. So I just want to say that I agree with Chair Davids. We're sort of moving, the pace we moved at today, we're acting like we have 3.5 weeks. We sort of spent all day waiting for an offer on basically sames and similars that a lot of times we kind of can just adopt. To your point, I mean, I know that we have this challenge with the language.
No side by side.
Yes, yes, Senator Rest. Just a moment, Senator Rest. I have the floor, please. Senator Rest, please. Senator Rest.
Go ahead.
I have the gavel today. I have the floor. Just like everybody else, you have to be recognized by the chair in order to speak. Thank you. All I want to say is that we are moving forward as though we have 3.5 weeks left to meet. And I believe the timeline that Chair Davids talked about is probably a little bit more closer to reality. Like, we got a day or two at most to do our work. And so, I just think it really is time to start talking about the big issues, to start trying to figure out how it is that we can come together with our two different approaches to meet our global target and reconcile those differences between our spreadsheets in particular. There are just, the fact of the matter is, I'm looking at the contents of these bills, there's a lot of stuff in here we simply do not have time for. And there are things that will be left on the table due, frankly, to the fact that you and I haven't really been meeting for several weeks like some other chairs have been. I'm really hopeful that we can move things forward at a more expeditious pace, because I agree. I mean, we could be looking at people who do not have the depth especially in these particular provisions that we do, making decisions about our bill. So that's kind of where I'm going to leave us. I don't know if you have anything that you want to share about conference committee tomorrow when you have the gavel, or any other thoughts.
Madam Chair, I would hope that you all would look at the provisions today that you did not want to accept, even though they were either similar or identical. And I don't know if, I don't understand that, but that's fine. If you want to come back with those, we certainly are now much more familiar with them, and we could take them up in short order. I think our first obligation is to accept the agreement with the tax increases and the that are the three major items, the R&D and the getting rid of electricity as a sales tax exemption for data centers, and the cannabis tax. That would show, I think, our leaders how serious we are in following their lead in the global agreement. And I'm, would be prepared to accept a motion, or to have one of our members make a motion that that is the basis on which this bill will go forward. We do want to make a pitch for the all of the ag provisions that are in the bill, most of which don't cost anything. Senator Putnam is going to be doing that for us in the morning for you to consider, and we certainly can talk about. We'll certainly talk about provisions that are only in our bill, which is the local sales tax reforms, and hear your objections or your support for them, and that we can limit those conversations. We'll start in the morning, since we're meeting pretty late tonight. It certainly won't be at 8 o'clock, but it will be starting in a morning meeting, and planning on meeting all day with those discussions.
All right, thank you, Senator Rest. So I just also would point out that, obviously we have a unique situation in the legislature, and we have a tie in the House, and, Chair Davids and I came together, and we negotiated a bill. We spent many hours negotiating a bill that could pass both of our caucuses, that we could pass off the House floor. And, so a lot of the provisions that I like and that he likes didn't make it through. I would just consider our bill a great starting place for a conversation about the things that are really going to get us toward a deal. And those are not these little provisions and not the ag provisions. They are, Chair Davids talked about them. They're the money items, some of these other sort of big outstanding issues that, we've all been dealing with all session. So I look forward to seeing everybody in the morning, and with that, we are adjourned.